just jump in straight to this first question.
Great.
You recently secured new funding, which has doubled your lending capacity. When other lenders have pulled back during this time and stopped lending as much or just reduced their criteria, why have you decided to gear up? Why is now the time?
Well, I think for us, I think sometimes when a disaster or a major event occurs, it gives you an opportunity really to go back to reset, if you will, and look to potentially grow again. I think for people and businesses, it does give you that chance. And I think that's how we view the pandemic. We understand the risk, accordingly. There's other hurdles that we're going to come across at the end of October and beyond, and whether a second wave comes about. But as we do understand risk, quite well, then it's about adapting and just remembering that the world's not going to stop spinning. We've still got to be there, trading, making money as a lender and being out there for our customers.
Mm. And what has the demand for bridging finance been like since securing this funding? And I'm aware that you secured both wholesale and private funding.
Yeah, well, I think in terms of the difference, we've obviously got some private funding, as you've just mentioned, and we're going to obtain wholesale. I think for us, if we put all of our eggs in one basket, then that would be maybe a bad move. I think it's about, again, going back to the risk elements, it's about spreading our risk accordingly, and each type of funding does bring its own benefits. So I think we'll be using those benefits to our advantage. In terms of demand, for bridging finance, I think since the lockdown restrictions started to ease, maybe at the back end of May, I would say, I think we've seen our inquiries nearly treble, which is absolutely fantastic. And going into or finishing August off, which we've just been through, that was our most successful month for completion. So I think that the message out there is that there is still business. People are getting confidence to continue to buy, after the initial part of the pandemic has kind of flown by, and I think that's important for us to move forward with. Everyone needs that confidence to move on.
Definitely. You've also mentioned before that that Ascot has completed the first phase of its business plan. What do you have planned for phase 2, which you're, I imagine, beginning now, and what's your long-term vision for the company?
Well, I think in terms of moving into phase 2, phase 2 is about increasing, or partly about increasing our funding levels, which, as we've kind of done and completed that initial stage. I think next, it's about moving on to increasing the infrastructure and the resources to cope, which we're moving forward with at the moment. And I think also looking forward, sort of past that, initial stage, I think it's about, looking for further funding and looking to gain a more competitive edge with different products out there, as we move forward. We're a relatively new lender out there, and I think, for us, it's about standing out or trying to stand out. The further we go down the line, I think the more we're going to be able to do that with the right infrastructure and the right funding levels.
Just for those who don't know, how big is the team at the moment? I know you're saying you are looking to expand slightly.
Yeah, well, we've just actually taken on 2 new underwriters, to cope with demand. So, kind of adding to the question that you just asked. So that team is growing at the moment, and I think collectively across all the different parts of the company, we're sitting at 13 at the moment. So it's a good number, and like I say, we're just looking to safeguard ourselves moving forward into the new funding levels, because we don't want to be in a situation to offer our product out there and not be able to provide the service that we've always prided ourselves with.
Of course. And you mentioned it a little bit just then about the all the different parts of the group and the companies that are under this. What insight or benefit does being the sister company of the brokerage Ascot Mortgages offer you as a lender and your broker clients? Because I assume you kind of know what they want.
Yeah, well, I think it's important because it has given us the wealth of experience and expertise for us to be able to assess exit strategies as a lender a lot more better, a lot better than most, I would say. We understand what exit lenders are looking for, through that expertise in Ascot Mortgages. So, it's helped us massively. And I think as well as that, Ascot Mortgages, the sister company, has been set up since 2008. So, that company's been through recessions and the ever-changing world of compliance and risk. So those elements of experience that we've, kind of experienced as directors has set us up to make sure that Ascot Bridging Finance is well prepared for the future.
Do you think it's that kind of experience has helped you kind of shape how you act as a lender?
Yeah, I think it has. I mean, in a similar way to the brokerage, the brokerage has always had high standards. It's an FCA regulated company, and there's a there's a good level of risk involved in sort of dealing with mortgages and related finance. So a robust governance plan is needed. Risk model is needed to be absolutely on point. And I think taking those elements again sort of into the bridging company, as much as we're dealing with non-regulated bridging finance, we still treat a lot of our policies and processes in the same manner, to make sure that we are safeguarded for the future.
And then for brokers who haven't worked with you before, what would you say is your main USP, and what one thing does the industry not know about the business?
Well, I think again, because of our sister company, we've been brokers. We understand the brokering market. So I think over time, as brokers have become to dislike certain elements of the bridging finance process, maybe the way certain lenders do things. I think the important part for us was to put that back into our company, to make sure that none of those issues that we previously experienced, and no doubt other people have done so as well, come to light during the journey with Ascot Bridging Finance. We're fair. We think outside the box, and I think that's important, because not one size fits all. Which is just about using a bit of common sense, in my opinion. And even if something doesn't quite fit into criteria, that's okay. Have they got a strong exit strategy? And if they have, then we've got to consider doing the deal. And importantly enough, or most importantly, we're a family-run company, so service and speed is what we're all about. We want to make sure that we look after our people and our customers, alike. So I think that's important for people to know out there.
And what does Ascot Bridging Finance have planned for the rest of this year and into early 2021?
I think, touching on something we said before, I think it's about building the company to meet demand. We don't want service to drop. Quality is key to our success out there. So we need to ensure that is instilled with everyone working for the team. We are building a really good team out there with some really good experience working for other competitors. And I think that's important. So I think for us in the next year, it is just simply about making sure we're building in the right way, and we can make sure that demand is met at all times.
A slow and steady scaling up.
Yeah, well, that's why phase one, was important for us. We didn't want to go out there and kind of light up the world straight away, because phase one is about proof of concept. We wanted to make sure that policies and procedures that were in place work, and if they didn't, we need to learn from any mistakes made and put those right for going forward. And then taking ourselves into phase two, that's when we could obviously scale up, increase our funding lines, and do things in the right way.
What, in your opinion, has been the most significant change in the bridging industry since 23rd of March, since lockdown began, and what do you expect the lending landscape to look like for the rest of this year and into early next year?
Good question. I think crystal ball time is out there, but no. I think in all seriousness, I think when 23rd of March hit, demand stopped immediately, phones stopped ringing, and that was kind of created by the uncertainty out there and the mixed messages by the experts. But I think the most important thing is remembering that people are resilient. They want to go. They'll want to come back with gusto. They really will. Once things settle down, and realise that as I've said before, it isn't the end of the world. I think the quicker we get as people and individuals, our confidence back up to go out there and buy properties, that'll be the best thing for our market. Confidence in the market and other sectors for that matter. It's not just about the property sector. I think if people are out there buying, whether it's retail goods, whether it's clothes, whether they're going to secure the contracts in different sectors like the industrial sector and stuff like that, the more confidence we have, the quicker we'll recover. But it's going to be a long and hard slog. But again, I think in terms of lending landscape, I think people and lenders alike, will take caution, but do things in the right way. And if they do that, then we'll be okay.
Do you think do you expect to see smaller, nimbler bridging lenders like yourselves kind of take more market share going forward? We've seen other smaller lenders kind of rise above this time.
Possibly, yeah. I mean, I think what happened towards the start of the pandemic was, there was a lot of larger bridging lenders that stopped lending, and for those that didn't, they reduced the loan to values down dramatically. Which is, for some people that would have been the right thing to do. As larger companies, there are more risk involved. I think for us, we continued to lend during the pandemic, but just with the understanding of what risk was going on in the world. But we took caution during that side of things. But I think having a positive outlook is important. It really is. Having a positive outlook on how things are going to move forward, and that's what we try to do within ourselves.
And what one key thing do you think will contribute the most towards the bridging market recovery post COVID-19?
I think quite simply it's just about consumer confidence. As I mentioned before, people do need that confidence to get back to where we were. I think what we have seen since mid-May to the back end of May is an influx of people buying again. Which was good. There was a question mark over whether that would just be maybe the backlog of people who were told by the government that they couldn't go and complete property sales. Obviously, they couldn't view either. So there was a lot of restrictions that stopped people in general. So there was maybe a fear that this was kind of a backlog of people just catching up with purchasing their own properties or purchasing buy-to-lets and such like. But I think we're now sitting in August, going into September, and that demand is kind of kept up. So I'm not an industry expert, by any means. I don't get paid millions of pounds to give my expert opinion. But my personal view is that because it's gone on for that long with the demand, hopefully that's a good sign that people are or have got the confidence, and that will long continue. And that's going to be really key to this market.
I guess it's an interesting time as well, because it would technically be quite a slow time during August, especially in the bridging market, because it would be the summer holidays. While I know people aren't taking those holidays as much as they would have done, are you finding that the demand is still quite high, and that maybe has counteracted the backlog, like you said?
Yeah, I think it has. I mean, don't forget, a number of things. People haven't been able to go away on the traditional summer holidays. So that's the first part. And for the people who have, they're either cutting it short because of quarantine and stuff like that, or outbreaks in certain countries, which has happened quite a lot. But I think the other thing is, in reality, you could argue your summer holidays, your traditional 6 weeks where people go away and that they have their time, they have the break. It's kind of started a lot earlier, because of the pandemic. So, I know, for example, my own wife, she was having to look after, our children, homeschool them, while trying to still do her job as well. So, she's ultimately, had the children for, nearly than 6 months now. So that 6 weeks has been extended. And I think a lot of people have been spending more time with the family because they've had to, they've been forced into that position. So I think kind of, what we have had, is the summer holidays shift earlier, and we've been able to, have better months now that the lockdown has started to ease a lot. So I think that's why, for us personally anyway, I'm not too sure about other lenders, but we've certainly had our best month in August.
Amazing. Is that ever?
Well, we're a small company, so we've been running for 3 years. So yes, it is ever. But hopefully next August will be even better.
Amazing. Congrats. And for those that don't know, how did you get into the specialist finance industry?
Well, personally, I've worked in financial services since 16. So I started out in Halifax, going back that now? 1997. So quite a long time ago. You know, my mum, my auntie, they were both in the financial services industry. So, you know, I had an aptitude for maths and numbers and stuff like that when I was younger. So it was kind of a natural progression in there. But as time went on, you know, I wanted to move into more complex finance. You know, I always had an interest in learning more. It was always sort of, you know, me just having a curious nature about, you know, what other products were there, and, you know, and what that meant. You know, if I could obviously advise on them as a mortgage advisor, as I used to be, you know, I would love it, finding opportunities, finding solutions for customers. It was all about, you know, trying to help that person. So, you know, we naturally progressed over time, and then, you know, after finishing my last role at Santander, you know, we created Ascot Mortgages. You know, Ascot Mortgages became a whole of market broker back in 2008. And, you know, and at the time that was a recession, a tough recession. And I think, you know, the people who needed mortgages, you know, found it tough to, you know, to get their, you know, solution. You know, lenders didn't really want to lend, you know, especially at the early part of the recession. So we had to work that much harder to find those solutions. And quite often it was people with county court judgments. It was the back end of people with self-certification of their income, you know, now finding that they couldn't get further lending because lenders wanted proof of income, and so on. So it was just about, you know, sort of identifying, you know, sort of how we could help those customers, and ultimately that led into Bridging Finance eventually, and you know, we became experts as a broker and team, and then eventually after that, you know, we wanted to do better than other people ourselves. So that's where, you know, we created Ascot Bridging Finance.
And it sounds just from your answer there that finance is in your blood. So, but if you weren't working in bridging, what would you be doing?
Well, I mean, I'm a director of 4 companies, so it keeps me busy enough, I think, during, you know, through those 4 companies. But I guess if my time did run out, and I had some spare time, everything would be, you know, all family orientated. I've got a wife and 2 young boys, who are the most important thing in my life anyway. And I think that's where I spend my time. You know, even at challenging times when you're on Zoom calls, you know, with the team, and the little one comes in to talk about who would win in a fight, Aquaman or Iron Man. So, yeah, challenging, but you know, I love them to bits, and I wouldn't have it any other way.
Who would win that fight, of interest?
Well, we decided during the Zoom call it was Aquaman because he could swim and he could keep his breath for a long time. So whether that's true or not, I don't know, but that was what he decided. So he wins.
Amazing. Are you guys back in the office now, or are you still working from home?
Well, to answer your question, we're in the office. We came back to the office maybe about 7 or 8 weeks ago now. You know, we've COVID-proofed the office, if that's what the terminology is. So we've got hand sanitizers everywhere. Everyone has their temperature taken, you know, before they come in. Everyone's had a test as well before they come in, just to be on the safe side. So, you know, just about taking precautions. But again, you know, you can only do so much, you know, and I think we're doing the right things. We're being thoughtful of our responsibilities as an employer, and you know, and I think we've done, you know, as much as we can do. So everyone's happier now because I think there's only so far you can stay in 4 walls, you know, and not go a bit insane. So I think everyone's happy.
Definitely. Amazing. Well, thank you so much for your time today. And it's been great for you to answer some of these questions that we had.
No, thank you, Beth. No, much appreciated. Thank you for your time.